Morning, folks. This is Anne-Marie. This is the SPY report for Wednesday, September the 18th, and we are caught in a little bit of a range event, big V reversal, but that's been the story of our lives for this particular time of year / time of the market. We've got these V-shaped reversals, and so we have to live with that, right? Not good for us to make money on a swing perspective, certainly, because we would give up all our gains if we were short, and if we had been long, we would still essentially be green, but dipping back and forth. So what we've got is this range right here between 170 and 171 that is a little bit tight. Difficult to trade off of. However, if we come in and bounce off 70.66, we should have a pretty good shot of moving to the upside. Top end, we're looking still at the 172.15 region for now. Things continue to be bullish signals all the way around. We just want to see if we can get up and over this wick here. We had one day where we faded about 50% of the gap, and now we're moving up again to the top of that space. Is this a double top event? I have no idea, but we could also say, let's back this up just a bit, that it might be a double top event here, right? So we've got a lot of testing. Now, here's what normally in a healthy space, here's what we would do. We would hit this region and we would either break out and then come back to test, or reject, fill in the gap, and then move to the upside. So we've got a lot of different formations that still ultimately will resolve in higher prices. Not sure which one that is, but I can tell you, if I breach this level, I know I'm breaking out past this. There are going to be buyers here that participate to the upside. We'll go into the next target and then pull back to see how we do here at the retest. If it holds, great. If it doesn't, it will come in likely to fill the gap, and then we can resolve to the upside. That is my thought. If we fail this area, fill in the gap, and then continue to lose, we know we've got ourselves a very choppy sideways action space that ultimately takes us right back into the trading ranges of around here. Here's the problem. Upside would be a lot easier to predict if we didn't have all these gaps floating around in our charts. And we still have quite a few gaps. It's just something for us to pay attention to. Gaps don't like to stay open. I know some folks say that gaps don't have to fill, but ultimately they usually do. And usually is the game that I play. Right? I play the usually game, the high probability game, and once it steps into that space, I know it's got a good likelihood of filling in at least 50% of it. Now, just because I believe gaps fill doesn't mean that I'm going to go short here and just wait for that to happen. That would be, looking for the word, stupid. Yeah, that's it. So we can't do those sorts of things, but we can take cues as it begins to break down to see as it moves into that level. All right, enough of that. Let's take a look at the Qs, the IWM. This one looking just the same, right? Let's go to the 4-hour chart, holding well above the region. So we have a pretty good shot at continued upside momentum. Right? That would be the next line in the sand, 106.35. Let's take a look. If we breach this level, that's the high, and essentially we have, because the charts are printing higher after market, particularly in the TF. So looking at this region, we go up here, we've got another 30 cents there, but really this chart will be in expansion and we'll have a lot farther to go. Where can we target this range out to be? Let's use Fibonacci. We are using motive wave charts, folks. These charts are quite beautiful. Really love them. If we just measure that wave, it pushes us all the way up into 106.62 for the first one, and then 107.37 for the next. So there's a lot of upside momentum sitting around there. If it breaks and comes back into this region, test the pivot, that'll be a big deal to see if it holds or not. If it doesn't, we'll come back down into this region. Pretty good stair step. That's a good wave measure, simply because it comes in here, does a 61.8 retracement, almost on the nose, and then is accelerating to the upside. Ultimately, if this is an AB equals CD pattern, we've got about $2 from this region. So that's 106.85. Ought to put us right about here if that's an ABCD pattern, AB equals CD pattern, and it certainly is building nice symmetry as it came into the 61.8. So, doesn't look quite as strong as the SPY, but you know what? Doesn't really matter. If it's popping back up here and holding the regions, it is still in very solidly trending territory. Let's take a look at the Qs. Let's take a look at the 4-hour chart. We'll go a little bit backwards. 4-hour chart, certainly not showing the strength that the IWM and the SPY have. Dipping down into this region. This is inside of the neutral zone. The slow SMI in the neutral zone. Now, the Qs really have been sort of leading the way for much of this move, holding very, very nicely, popping out into the region. I had called that area as the target. It did not get there. It was 10 cents shy, right? So I'm going to still leave that there, but I am going to move that into that region right there. And now we'll see what's going on. Does it hold this area? That is obviously the breakout space. That's primary support. This is the secondary support region where you're going to think about, if it fails this area, then I do not have upside momentum that is proper at all. Now my fast SMI is continuing to move. If I breach this region here, right, the high of the second wave, after I've done a pullback, it does mean that I've got upside momentum. This wave, and let's see how much that is, 78.6. Almost. Could be a butterfly in the making. We'll see what's going on right there. But if it is, and it holds that region, we've got lots of movement up here, up into 79.37. Minimum 79.01. All right, so that's it. This is a big region for us to hold. If we hold it, great, more upside momentum. And if we don't, we know that we have got ourselves right back in this sideways channel. We should come all the way into the 50% level in this trading range right here, and that looks like it's right about there, top of the gap, right? This still has an unfilled gap from several days prior. We've got that sitting right there. That's the gap fill event. We'll be watching for that to potentially give us some holding room. And other than that, we just need to pay attention and trade what the charts tell us to. Good luck today.